Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for, well, no fooling, April 1st, 2024. Let's take a look at what happened here overnight. First off, we had Asian markets last night. We're mostly higher, pretty bullish across the board. The only one that was down was the Nikkei. Slipped back down below its 40,000 level, but we had a nice little surge from some factory data helping out the Shanghai, pushing it up over 1% last night and getting it well back above that kind of critical 3,000 level in the Shanghai. Let's take a look at Europe. Now, Europe up this morning, little bit of a mix here, but the main focus here, the DAX, FTSE, and the CAC all slightly higher this morning, somewhat marginally, but up across the board this morning. And then we have a big surge in the U.S. futures, with Dow futures gapping substantially higher, up 116 points. The S&P 500 is up 0.39%, and the NASDAQ is surging up 0.58% this morning. When we take a look at our bonds this morning, our bonds, interesting mix here as well. We have the 2-year bond moving higher at 4.60%. The 10-year at 4.20%, and the 30-year at 4.37%. So one of the things we want to be continuing to think about is that major inversion. This is the longest inversion I can ever remember in bonds, and that is the 210s still significantly inverted. Let's take a look at gold, precious metals here this morning. Gold is huge this morning, up $32 an ounce. Silver being up substantially as well. Copper's going up, platinum, palladium, big moves in the precious metals. And then interestingly enough, Bitcoin and some of the cryptos are significantly lower. Bitcoin early this morning was down $1,600 an ounce. It's now down, or not an ounce, per coin, $1,400 per coin here at the moment. So kind of an interesting morning setting up here on the 1st of April. Let's take a look at our charts. And remember, we're going to do this with a little bit of thought process to eliminate bias and rest a little bit. So how about we settle in? Let's buckle up. Let's get ready for the Monday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I do truly appreciate it. Let's take a look at these charts and see if we can gain some information about how we might want to approach the market today. Remember, we're going to shake off some of that bias. Just take a look at the chart for what it is, not for what we want it to be. First off, let's take a look here at the diamonds, and clearly this big surge this morning. Blue sky highs up here. We're all in, pushing up strongly here this morning. Now, what is interesting is that we have pulled back from overnight highs here in the diamonds futures, or Dow futures. So we'll want to watch that this morning. One of the things that can sometimes happen is we zoom up here in these charts, and we get a big gap up on a morning open, and sometimes that can be the high of the day. So watch for that possibility that on a big gap like this to new record highs, that possibility of a pullback could exist. But that being said, new highs here. The bulls are definitely in control. The trend here in the chart is definitely bullish. So just continue to maintain yourself to the upside, but be watching for that possibility of that little bit of a fade that could occur. Now, that being said, if we were to fade back, if the bears find some inspiration, well, first off, I'm going to look right across here for a little bit of price support in that chart. So a little fade back into here would mean nothing. It just just a little rest in that chart, so maintaining bullishness in here. Where this could get a little bit well, concerning maybe as if we started pushing back and testing some of these big candles, get down here in the mid area of these big swing candles in here. Pushing down into there might raise a little bit more concern, but you'll notice the way I have that drawn right now, that doesn't even hurt the trend. So might take a little bit of a froth off if we were to pull back into there. Where we would really get nervous is if we start breaking down below these levels in here and coming back down toward this level in the chart. But right now, there's nothing in the chart that suggests that. We just want to be aware that that possibility does exist if those bears were to engage. Now, if we take a look at the SPY, SPY is also very, very bullish. Bullish trend, bullish patterns all over the place. No reason to believe of any change here in this market, and we're in blue skies here above. So you tell me how high we can go. Everything is up here in the SPY. Now, if the bears had some reason to come in and engage, well, I'm going to look for a little bit of price support right in there, pull back into there, and there would be no particular worries if that were to occur. So watch carefully there. Now, if we start to break down below there, maybe we start coming down into some of these areas right in here. Notice how we're kind of connecting a lot of these candles together right here in that chart. So if we were to come down in here, pushing down, no particular worries there because we're still holding trend, just a little bit of a fade. If we continue to pull back and we were to break down below this area of price support, I think that's where things could get a little bit worrisome for the market. And we might see a bit of a rush to the door, meaning that a lot of folks would start taking profits to protect themselves if that were to occur. But that being said, there's no signs of that here at the moment. If we take a look at our QQQ, well, QQQ has had just a little bit of struggle in here. You can see in this gap up open this morning, if we can close up here, we have that possibility of a new record high close if we can close up here. But you can see for a record high print in the chart, we've got to go a little bit higher. So we need to see a push. Those bulls find that inspiration and push us on higher and break out of that area to truly get that blue sky up there in the QQQ. Certainly possible the way the market's been acting, and certainly the way tech has been acting. Every reason to believe that that could be the case. Now, if that doesn't occur, there are a couple things here I want you to pay attention to. First off, we have this upside trend, so it is entirely possible that we could consolidate here. Just be in a consolidating range across this area and just rest here in the QQQ. That's very, very possible. And I'll tell you honestly, not that unlikely to potentially occur, just simply because we're going to be waiting now on the next round of earnings, and we are in the blackout period. I think the numbers are right around 87 to 93% of stocks are in their blackout period, which means they can no longer do corporate buybacks. We're going to be waiting until those earnings come up, and it's pretty normal to see some choppy price action in the market as we wait. Now, that being said, if the bears were to find inspiration, push back into here doesn't really hurt anything. That would be a nice hold of support. If they were to continue to push, however, and break down through that level, you can see we've got some price support right in here, and that would be testing that trend. Going on below that area of the chart, you can see there's some pretty good levels of price support, but we give up that trend, and I'm guessing if we slip that much, we would start to see some fear come up in the market. And again, maybe that run for safety could potentially crop up here in the market. So just be careful for that. And then if we look at IWM, well, IWM, this is a big deal, I think, for the Russell. This breakout up here, this was a big breakout. Now the question after breaking out is, can we hold that level as a price support? Right now we're showing good. We're trying to pop higher here in the pre-market, and there's every reason to believe right now, because of this trend, that we're going to stay up here. And one of the reasons is we're seeing quite a rotation into more of the small cap area of the market. So if that rotation continues, then there's every reason to believe we could stay up here, and IWM can maybe do a little catch up here in the market. It's been very underloved for the last couple of years here in the market, and maybe it really starts to pick up here if that rotation continues. And you can see pushing on higher here in this chart, we'd be looking at some levels, maybe here, let me just drop a line over here. Maybe somewhere in here we're going to catch some new levels of price resistance in the chart. So I would place that up there as a possible target if we continue to push higher. If the bears, however, were to come back in and show a little aggression, then a pushback into here would not be out of the question, and it doesn't change anything here in the chart. As a matter of fact, a pullback to test support and hold trend and support would actually be a very bullish and positive thing that IWM could do. If we can pull back in there and hold and then bounce off of that area, very, very bullish. However, if we were to pull back below that area, well, that's where things get a little bit wonky here, because great breaking through a new level of resistance is one step. Then we've got to prove that we can hold it. And if we were to break back down below there, we're going to likely be giving up that trend in that area here as well. And then we start looking at some of these levels down here to test as price support in that chart. So watch that carefully here. This is kind of a critical decision point here for the Russell. Let's take a look at our VIX. Now, our VIX has been showing us almost no fear whatsoever here in the market. We're still holding on, just kind of clinging to this area, kind of a wide zone right in here, clinging to this support area here in the chart. You'll also want to notice that we're maintaining this downtrend in the VIX. So right now, no fear in the market. And if we can continue to see the bulls push, and we're seeing this big gap up this morning, so no reason to believe that we couldn't see this actually dropping down through these levels and really reaching some areas of bit complacency here in the market. Now, if the bears were to find inspiration, first off, we need to break that little trend right in here. Remember, we held it as resistance. We have this downtrend in here. If the bears were to engage, we need to see them pop through there and then hold a higher low. For now, don't see that happening, at least today, unless something major changes here in the market. Right now, the bulls are definitely in control. Let's take a look at our T20s now. Our T21-22, which is the 4-week new high, new low ratio. Well, we do have a problem with this, and that is that we are very overbought here in our market. The new high, new low, remember, it cannot go over 100. And although we're gapping very high this morning, remember, we're already starting to see a fade from some of the overnight lows. So you want to watch that carefully. If we gap up big, we could get that fade back here. Certainly does seem to be a possibility. So watch that carefully. We're in this bearish reversal zone. If the bulls find inspiration here today, and they're certainly doing it in the pre-market, we can pump up here a little bit higher, but remember, it's impossible for a ratio to go above 100. And if the bears find inspiration, well, just keeping in mind, we've got a big open door here if the bears were to engage today or at any time this week. If we take a look at our T2108, now T2108, the percentage of stocks above the 40-day, just reaching on up there. This is very, very bullish. You will notice on Friday we hooked over here just a little tiny bit, but I don't see any problems in here on T2108. We're coming into maybe some resistance areas, and you do want to note that when we get up into this area, as we start pushing up even higher, we can push on higher up into here. but then we reach that very frothy area of the market, and it's unlikely that we can sustain a move above there for very long. That just means everyone's in the market, all the money's in, and then we start to see that fade back. So watch that carefully here. As we continue to stretch this up. Our T2107, very much the same thing, stretching up here into that very frothy area of the market, up here around 65-70%. We are extremely frothy. We'll want to watch this closely, trying to break this resistance here in the chart. Certainly the bulls are in control, but if there's a reason for a fade, it might be just simply the wait and see what happens with the next round of earnings that gives us that little bit of fade. It doesn't necessarily mean we collapse or come down, but we fade back in consolidation just to rest this pattern as we wait for that next round of earnings reports. Let's take a look at our T2101. Now, T2101 is the absolute breadth of the market, and you can see that absolute breadth did shoot up here pretty strongly with that end of quarter bullishness here in the market to push us on through. We'll want to watch this carefully. You see we hooked over here, and earlier in the day on Friday that was faded back a little bit more, but we got that resurgence here. So watch that carefully here. If that were to begin to fade back, maybe a little bit of concern, but right now this is still showing bulls are definitely in control. Let's take a look at our economic calendar here for today. In our economic calendar, we've got a few things to be paying attention to here this morning. Notice we've got a PMI number coming in here this morning, so keep an eye on that. They're expecting 52.5, so showing a little bit of growth in our PMI. Remember, anything at 50 is stale. Just above 50, we're showing a little bit of improvement in our PMI numbers. ISM manufacturing, they're looking at that coming in at 48.3, and we know that our manufacturing has been really weak. This is still showing contraction, but a little improvement over last time if we hit that number. And then, of course, construction spending this morning looking for a 0.5 up from a negative 0.2. That would be bullish on construction spending. You'll want to note that we've got a lot of Fed speak here this week. We've got lots and lots of Fed speakers this week, so you'll want to keep, there's Jerome Powell in there on Wednesday. Just a lot going on in here, so remember, we want to be paying attention to that. They can certainly, throw a monkey wrench into the works here and create some issues for the market and volatility as they're out there speaking. You want to keep in mind the rest of the week we've got factory orders. We get the job openings report. Remember, we're going to hit our ADP numbers in here on Wednesday. Normal mortgage applications, ISM and petroleum status in here. We're going to hit international trading goods and our normal weekly jobless here on Thursday. And then the big number of the week is likely going to be this employment situation number. Keep an eye on that. Certainly, I keep thinking that there's going to be a big change, that we're going to start to see some those job loss numbers really starting to rise. Haven't seen it yet, but watch that carefully on all of these jobs numbers this week. If they continue to come in hot, that's going to be a little bit of a problem for the Fed, I think, and lowering rates. Let's take a look at our earnings calendar here for today. Now, our earnings calendar, very light. The notables for today, well, I've got one. For the whole day, I've got one, and that's going to be PVH. Other than that, there really isn't much going on here on the earnings calendar. There are some other very small cap earnings, but just not much happening in here to get inspired. Now, that will grow as we get into the week. There'll be a few more numbers as we get into the week, but very, very light on that earnings calendar. So kind of keep that in mind. Let's take a look at some stocks that could be setting up for today. But before we do that, everyone, if you could do me this quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube. Also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, and that would be click that thumbs up button, leave a brief comment. That helps the channel to continue to grow. And I just want to say thank you to everyone who does take the time to do that. I truly appreciate it. And also, if you could make sure and share these videos out on your social media feed, that helps the channel as well. And for those of you that continue to support the channel through the Buy Me a Coffee link, thank you so much, everyone. I very, very much appreciate that. Let's take a look at some of these stocks that could be setting up, and remember that these are not recommendations to buy or sell any security. Make sure you do your own due diligence. You never ever want to blindly follow anyone else's trade ideas. You want to follow your trading plan and your risk tolerances, and make sure that whatever you do, you're planning your overall risk in this market, because we are kind of stretched at the moment. And if we were to start to fade, there could be I'm honestly just a little bit worried there's going to be a lot of folks get hurt on if we get a substantial pullback in the market, because they're so long and so convinced that the market will never fall. And usually that's when it can get really painful. If you remember, Warren Buffett is, when the market is uber bullish, you want to start being fearful. It's when the market is very bearish, you want to start getting excited and start being a buyer. So we are pretty elevated here, and we'll want to be taking a little caution as we trade moving forward. Don't overextend yourself in your trading. Let's take a look at some of these charts. Now, first off, I'm going to have to just continue to talk a little bit about what's going on in gold and silver. Gold really stretching up here this morning. Right now, gold futures are up $29 an ounce as I'm speaking. A little bit of a drop from the all-time high here earlier this morning, but you can see just really looking bullish here in the market. Now, it is kind of interesting that the gold market is really projecting here that the Fed is going to have to cut rates, and really pushing strongly to the upside. Now, so far, there just isn't anything in the economic data that would suggest that, but we certainly have a lot of bullishness going on in metals. So keep an eye on GLD, keep an eye on PHYS if you prefer owning a little physical gold. Very, very bullish here in the market. If we take a look at silver, silver's got a little bit more work to do. You can see dealing with a major resistance area here, but just imagine in this resistance, if silver were to break out through there and hold the higher low up here, boy, I've seen some really big runs created in the market when you break a multi-year resistance high in that. So keep an eye on silver. You also want to be keeping an eye on PSLV. This is a physical silver. And then, of course, anything in the mining sector. If we take a look at GDX very, very strong, pushing on up here. A lot of the miners looking good. You know, if we take a look at Newmont, nice breakout from that consolidating resistance, so popping on through here, little rest or pullback would show that opportunity here to the upside. Barrick Gold, very strong. We've got AU, we've got KGC, just everywhere. Gold is looking very strong, and silver miners as well looking very strong. Palladium might be something to be watching in here. We popped hard. Notice this is a big downtrend break here in palladium. If we can hold this support level in here, start working its way back up, I'd keep an eye on that. Now, another place that you want to be looking that could show a little bit of weakness today, and that would be in bonds themselves. If we take a look at TLT pulling back from this resistance downtrend here in the chart, because we've got those bond yields trying to go a little bit higher here today. So watch that carefully. I've really been watching this. I've got a starter position in TLT, and I'm just waiting for this to make that higher low so that I can get pick up some more position in here. But so far, it's not showing that, and we're showing that possible evening star type pattern here and that possible pullback here in TLT. And if we take a look at bond funds like BND, big ugly pre-market candle in here, finding some resistance in the chart, some downtrend still in there. If we look at junk bonds, also showing a big area of resistance in this chart. So watch those closely. If bond yields continue to expand, these bond stocks will continue to pull back, or bond ETFs, I should say, would likely continue to pull back, and you'll want to keep an eye on that because, well, we can see these fluctuations in currency prices continuing to happen here in the market. As you guys know, I mentioned some time ago this FXI. And if you're a believer that the Chinese economy is coming around, well, this was a good bullish move that we had in here earlier, about a month ago. But you can see we're struggling with this big downtrend here in the chart. Now, if you're a bull here on the Chinese market, we need to see, and you can see we're pushing back up here. We need to see this come up in here and maybe push through that major downtrend resistance in there. So keep an eye on FXI if you want to have any Chinese issue here in the market. That would certainly be a reason to be watching that if we can break that major downtrend. Let's take a look at a couple other places. As you guys know, I've been mentioning soybeans here for a while. Nice little rally, but unfortunately we're pulling back pretty strongly right now. We may be losing that 50-day moving average. So the reason I'm bringing this up is I've been kind of talking about this to the upside, and now we're starting to show that potential fade. Watch that carefully. If bonds do continue to go up, we would probably see these kind of things move lower in the market. But one thing that's definitely not moving lower, and that's what we're seeing here in energy. We've got, my goodness, oil stocks moving very strongly to the upside. So keep an eye on those energy sector stocks out there of oil and gas. Very, very strong moves here overall, and you can just go into the XLE and just start looking through. Oh boy, something's wrong here because that's not near that makes up XLE. We've got a problem here in TC2000 this morning, but lots and lots of stocks moving to the upside here in this one. Now, KMI is of interest to me. KMI is a natural gas company, but they're mostly a pipeline. So notice this big resistance area here in the chart. If we were to break through up here and hold, I'd be keeping an eye on that for more potential upside, breaking through a big resistance area like that in KMI. Take a look at stocks like ExxonMobil, ConocoPhillips. Lots of strength here. Now, if we take a look at oil exploration, oh my goodness, oil exploration. Also, whoops, I'm going to go to XOP. XOP, really, really strong here, trying to break through a major resistance area here in the chart on oil exploration. Popping through any rest or pullback would set up that next opportunity in this. I'd keep an eye on that. I'm keeping a pretty close eye here on rig. Rig trying to break through a big resistance area in the chart. I've been mentioning this one for a while, but I'll tell you, if this pops through this resistance up here and really starts to show that strength, I'm going to be looking for an opportunity maybe in XLP to see that carry on higher. If we need more oil, we've seen in our petroleum status numbers that our oil supplies have been weak. So exploration and U.S. getting back to work in oil production would certainly improve some of these stocks. So watch that carefully here with rig. Other places, I think we want to pay attention to the financials. My goodness, financials, the big banks, really, really strong, pushing to the upside here. A little bit of a pop and drop here in the pre-market, and one of the reasons I think that might be the case is bond yields are going up, and that's causing more problems for these banks than you can shake a stick at. But right now, the market is so uber bullish, they don't care, and we're seeing those big financials breaking out up here, and we're seeing some all-time highs being made here. So watch that carefully in those financials. Now, I would have a little bit more of a concern for our regionals, but our regionals are also showing that bullishness. So perhaps I just don't know what the heck is going on here when it comes to this, because we see lots of this commercial real estate situation, not only here but around the world, creating problems for our regional banks. And there's a list out where we've got a bunch of regional banks that are functionally insolvent. They owe more, or they have more debt than they have assets. And we're still pushing these regional banks higher. So watch that carefully. Breaking this downtrend, if they hold that higher low, it may continue to go up. But I would be really a little bit more cautious here on these than in other areas of the market. If we take a look at retail, well, when we take a look at Walmart here, Walmart's making a little bit of a fade decision. Kind of double topped here. We broke some support here in the chart, breaking that trend. Now, certainly this can turn around and recover pretty quickly, but we're starting to see some of retail, some of those big leaders in the market fading back here just a little bit here. If we look at Costco's kind of made that fade back, and that possibility that this could actually be setting up a bit of a downtrend. There are places in the market, though, showing some improvement, like JWN here in retail, showing a higher low here, trying to break back through resistance. If it can hold up here, then every reason to believe we could attack these highs. If this were to slip and fail here, well, that could start maybe that little bit of a downtrending situation here on some of these retailers. So just keep a close eye on it. There's a bit of a mix going on in here. Now, when it comes to small cap or defensive sector, my goodness, we're seeing quite the moves here. Coca-Cola, trying to break through some major resistance here in the chart, has been showing lots of recent strength here, pushing up. PepsiCo pushing through, nice little consolidating move up here through that resistance, pushing on higher here in PepsiCo. Take a look at Schmuckers, SJM. It's been trying to rally up, big volatility in here on Friday, but watch that carefully if that breaks through that resistance. Take a look at STX on the computer chips and things like that. STX had a big bullish pop in here and pushing higher. If we can hold this support here in that chart, look for that next opportunity. I also saw WDC making some moves in here that we might want to be keeping an eye on, really stretching here to the upside. Any rest, consolidation, or pullback in here would set up more opportunity on that area of the market. So lots of bullishness here, lots of bullish charts to be looking at. Just be careful once we get so uber bullish, there is that possibility, that fade, that whipsaw, that pullback, and this is right at the right time of the year as we're waiting for that next round of earnings ahead. So with that, everyone, I want to wish you all a fantastic day. Thanks so much for being here this morning. I truly appreciate it. Be careful, be safe. We'll see you right back here bright and early Tuesday morning. Have a great day, everyone.